ABML morning update. Nifty winning run seen extending into fourth day. Global markets. US markets closed mixed on Tuesday, with the S&P 500 and Nasdaq composite ending lower after a weaker than expected retail sales data weighed on sentiment, while concerns around the impact of artificial intelligence on parts of the financial sector added pressure on stocks. The S&P 500 slipped 0.33% and the Nasdaq composite declined 0.59%. In contrast, the Dow rose by 0.10% to settle at a fresh closing high after marking its third straight intraday record earlier in the session. Economists surveyed by Dow Jones expect payrolls to rise by 55,000 compared with a 50,000 increase in December, while the unemployment rate is seen at 4.4%. Markets will also watch closely for revisions to prior data, which could offer further insight into the health of the US labor market and broader economy. European equities ended on a negative note, with the pan-European Stoxx 600 down by 0.07%. Domestic market. Indian equity indices ended on a positive note on February 10th. At close, the Sensex was up 0.25% at 84,274 and Nifty was up 0.26% at 25,935. GIFT Nifty trades higher by 96 points at 26,067, signaling a positive start to the trading session. Equity mutual fund net inflows in India moderated in January, sliding 14% month-on-month to 24,028 crore rupees from December's elevated base as heightened market volatility and macro uncertainty tempered investor risk-taking. Although net flows remained firmly positive, incremental allocations to diversified equity schemes moderated relative to recent trends. Mid and small cap strategies continued to garner inflows, albeit at a measured pace, signaling a more selective risk appetite across segments. Systematic Investment Plan (SIP) contributions remained resilient, exceeding 15,000 crore rupees, reinforcing the durability of long-term retail participation. Elevated volatility and profit booking across select sectors appear to have curtailed discretionary lump sum deployments, which retreated from the prior month. The deceleration in equity inflows amid the backdrop of mixed corporate earnings and macro signals suggests that investor engagement remains intact but increasingly calibrated in the current market regime. Focus for the day. Juniper Hotel Q3 FY26 results. Mrs. Bector's Food Q3 FY26 results. Mahindra & Mahindra Q3 FY26 results. Key corporate developments/policy actions. Eicher Motors reported consolidated revenue grew to 6,114 crore rupees, up 22.9% YOY, supported by strong motorcycle demand, with net profits rising to 1,421 crore rupees, plus 21.4% year-over-year, despite a 55.45 crore rupees exceptional loss. Som Distilleries reported a weak year-over-year Q3 performance, with revenue declining 16.8% to 251 crore rupees and EBITDA falling sharply by 46.5%, leading to a 430 basis points margin contraction to 7.8%. Net profit dropped steeply by 74.5% year-over-year to 5.5 crore rupees. Amber Enterprises India reported revenue grew to 2,943 crore rupees, up 38% year-over-year, driven by strong RAC and electronics demand, while profit before tax and exceptional items more than doubled to 130 crore rupees, up 109% year-over-year, though weighed by an exceptional loss of 103 crore rupees, resulting in net loss of 9.3 crore rupees. Apollo Hospitals reported consolidated revenue climbed to 6,477 crore rupees in Q3 FY26, up approximately 17% YOY on broad-based organic growth across hospitals, healthcare and lifestyle businesses, with EBITDA rising approximately 27% to 965 crore rupees on improved margins and consolidated net profit surging approximately 35% YOY to 502 crore rupees, reflecting strong demand and cost efficiencies across its healthcare segments. Techno Electric delivered a strong YOY Q3 performance, with revenue up 37.1% to 872.2 crore rupees and EBITDA rising 40.1% to 126.1 crore rupees, supported by a 30 basis points margin expansion to 14.5%. Net profit also grew a healthy 24.2% year-over-year to 119.3 crore rupees. Fund flow. FII bought shares worth 0.69 billion rupees, while DII also bought for 11.74 billion rupees.
Investment in securities markets are subjected to market risks. Read all the related documents carefully before investing.